What's really exciting about fintech today is, again, lowering the cost of everything from building a product, launch a new product, getting financing in the hands of retailers and things like that as a bank, running transactions, running payments. The total cost of ownership, the total cost of operation is going to go down to probably zero.
And welcome to the Startup Innovators podcast, where we look at some of the hottest companies on earth and some of the coolest startup founders. And I've got one today, Tim Lee. I was going to say Timothy, but I'm Tim too. So we're just going to go with Tim 1 and Tim 2 to make it fun. How are you doing today, Tim?
Doing great. Thanks for the invite. Happy to be part of this. Looking forward to it.
Thanks. Well, I know you normally hang out in sunny Southern California, but you're in sunny, I guess, hopefully sunny Tampa, Florida today, doing what great entrepreneurs do, which is going out and talking with potential clients and partners. I see the credit union sign in the back, always pitching the sign of a good founder, never ends.
Yeah. In fact, both of the founders are here. My co-founder, CTO Sam, is still there, working his way. But this is a really important time for us. This is our third year in the business, and I like to say that we're on a scaling year. So we got to get ourselves out there talking to people that might be able to use our platform. So here we are in Tampa, Florida.
Well, it's amazing to have you as a guest. So I like to do a little intro because a lot of times people aren't familiar. In this podcast, by the way, we're going to focus on entrepreneurship because so many people either are starting out and running companies now. You don't need tremendous amounts of capital, even though a lot of capital is available. It seems like the seed rounds or what the A rounds used to be. But there's also this direction of people trying to get further upstream before they take institutional capital and starting. And so many young people are thinking about how do I do this on my own? How do I become even a solo entrepreneur? We're going to talk a lot about your experiences and kind of your thoughts on how that should progress. Since you did start out working kind of in the regular business community and executive leadership roles before jumping into it. So let's go with this, Tim, and let's rock and roll. Tim Lee,
Yeah.
you're a serial fintech founder and veteran credit exec with more than 20 years in banking, risk, and lending. You began your career in technology and risk at Chase's consumer banking division, went on to lead credit risk modeling at Think Finance, served as chief risk officer at QuickBridge, and became the EVP of non-mortgage lending at Loan Depot, overseeing large-scale consumer lending operations. Then you made a shift after all that time, jumped into the entrepreneurial journey. In 2016, you co-founded Kuber Financial, which was a state licensed personal lender that operated across multiple states. You're also the co-founder of Max Decisions and Alchemy. So I guess your third venture. And today, which we just talked about, we're excited about, you're the CEO and co-founder of LendAPI, which is a venture-backed embedded finance platform that's processed, and this is pretty amazing, over 100 million credit applications globally. And like, I think that was under 2 years when you hit that part. And last year, you won the best show at the Finovate Fall New York City 2025 conference. Tim is also a guest lecturer at the University of Southern California, a place I've been to many times. He has a BS in industrial and systems research from San Jose State University and a master's in operations in research engineering from USC. Sounds like someone who knows a lot about fintech. It's great to have you here.
Yeah, that was a memory. Yeah, that was a great memory lane. Yeah, so I spent about 15, 20 years of my professional career working in large banking financial services companies. Prior to that, though, I used to work for Intel Corporation out of Arizona, building microprocessors. I feel like some days I should have stuck with that. Yeah, you're right. After Intel got recruited to work for JP Morgan Chase to build out, Chase.com, Chase mobile app. This is, I want to say, almost 20 years ago, back in when iPhone 2, maybe 3, was just arriving. The camera on those phones are just good enough for you to take pictures of the check. I don't know if you ever experienced it
Yeah,
yourself.
totally. Oh, yeah. Believe
We
me.
we invented all that stuff there, out of Columbus, Ohio, out of all places. That's where the retail bank was headquartered at Chase. But fast forward, I'm not to bore you with all that. corporate world. Fast forward, I want to say about 10 years ago, I find myself doing the same thing over and over again. You named a bunch of companies that I was essentially building banking core, lending core systems for all of these companies. I only put a little bit of stuff on my LinkedIn, and there's just so much other stuff that I don't have time to get into. I thought to myself, my God, maybe we should build it once and lease it back to everybody instead of spending a year of my life. Although I'm not saying that I'm the only one that can build this stuff, but just from my personal experience, I feel like maybe I can build a software company that focuses on this solely. I don't have to shift my role every year and a half, 2 years to build these things for various different companies that I worked at and do it once, lease it back to people. Maybe they're happier and I may be a little bit happier as well. So I jumped in. Um, I clearly remember after my fourth child was born,
Your
and I said to
fourth,
my wife,
wow.
I said, maybe it's time for me to try this entrepreneur thing. Found some good folks that I worked with before. And we all had the same kind of aspiration. And we started building, the Kuber financials, the Max Decisions, the Alchemies of the world, and LendAPI, the latest rendition, which in about a week or so, 2 weeks, we'll be finishing our second year. Um, Felt like is everything I possibly know about lending, finance, banking, and build it all into a almost to do yourself kind of a platform to help banks and credit unions, launch products on their own quickly, as opposed to waiting for 2 years, 3 years for a Tim Lee's of the world to build it for them, wasting millions. We sort of go daddyized this whole industry and brought that Figma framework experience to this industry. So that's really the short of it and the
Well, I
motivation
do
behind
want
it.
to. I want to jump into LendAPI for sure, but I want to go back to that inflection moment, 2016, because you said two things to me that I wanted to clarify. Because it's I talk to so many entrepreneurs. One of the first things you always ask is like, why did you decide to be an entrepreneur? Because it can be, if you're well educated and you're relatively smart in your field, you can live a very comfortable life as a playing a leadership role in lots of different companies. They pay well. Maybe you get lucky and have equity in one that actually does provide a big return for you. We see that all the time here in the Silicon Valley, obviously. But you said two things were interesting because my father was an entrepreneur, not like the venture capital type, but the traditional small business guy, and did very well. And one of his reasons for doing it was it echoed a little bit to what you just told me, which was rather than just do things for other people all the time, if I'm going to have the same effort, why not just do it for myself? And that was his reason for pursuing things independently and becoming a lifelong entrepreneur. Um, but what you traditionally hear from like the younger tech CEOs that are going down that venture capital path, it's always about wanting to change the world and make an impact. And I think most of the entrepreneurs, if you get outside of our tech space, they don't become entrepreneurs because they want to change the world. They just kind of want to do things on their own because if I'm going to put, all my life savings and my life effort and knowledge into something, why not bet on myself versus just playing a role with other companies? And so if we were to put a pie chart and look at every type of entrepreneur from the solo plumber, to the $1 billion, unicorn in the tech world, I bet you, 80% of them are just doing it because they want to bet on themselves and somebody else. But is that what you were thinking, or are you from the camp of, hey, I want to change the world and make this giant impact?
Yeah, I mean, like I work in banking, and the most boring part of banking, which is software that supports all these transactions and underwriting, financing, all that stuff, right? So, and I was 10 years ago, so I was in my mid 30s. Um, yeah, actually, today I hang out with a bunch of folks that are actually just at Stanford, MIT. They quit school after first year and start building some stuff, right? So
I
literally
love
next door
that.
doing this. So like, you can see in their eyes that I can tell they're about to change something fundamental about whatever they're trying to solve for. For me, I mean, this is probably an honest statement. For me, it was really about money. To be honest with you, I probably hang out with a lot of entrepreneurs. I grew up in San Francisco. I live in LA, Orange County now. So I feel like I was influenced by a lot of people and say, hey, you know what? if that guy could build something and make a
Why
bunch of
can't I?
money, let me do the same, right? Why can't I do this? And I went through a lot of these just self discovery, thought about it really hard, and I had a conversation with my wife, obviously, and get her okay on it, and she thought I was kind of out of my mind. You walk away with the yes, I'm not going to substantial amount of salary, equity, and all that stuff, right? But it just wasn't satisfying, and I felt like I could build a much better product without maybe this to your scenarios pie chart without just bureaucracy. I had to go to somebody and say, "Hey, can I build this?" You know, I thought I could move a whole lot faster and build a product that um, they probably haven't seen before. To a certain extent. So it was just like a personal satisfaction, a little bit of anxiety. I saw all of the not all, but some of the idiosyncrasies out there, and there was just lots of bureaucratic stuff that stood in the way. I'm like, if I were to do this myself, even if I don't raise any money, I could probably build a better product and and then bring it back to them. And they will say, hopefully that was my imagination. They'll say, "Oh my God, Tim, this is great. Why didn't you build it here?" Well, because there's a lot of hands in the jar, right? So I think a lot of that, and we kind of talked about this prior to the podcast. A lot of that is maybe because I work in corporate for too long. I spent about 10, 20, 12 years working at Chase, working at Intel, working at these billion-dollar companies, and I felt like maybe that I was a little jaded. Continue that journey, and I just felt like I got to do this. I got to do this on my own and find somebody else that's in the same kind of a place and build something that's wonderful. As far as changing the world, I'm not sure if I was there then. It was again, it's a boring industry, and the boring part about this industry which is offering demand.
Well, I love the honesty about it
Yes, so,
because I think so many times people
you
prep
know,
for interviews and they want to talk about making an impact and changing the world. And I think if you truly are coming from that perspective, you should share that perspective. But I also love the honesty of it. It's so funny because you spent all this time learning how to manage risk, right? And risk assessment at for your own personal decision, jumping off and becoming an entrepreneur with 4 children is, there's a mismatch there between that the risk assessment should have been do it when you're 20s and 30s when you have no children, but not later. So it sounds like that drive, like you said, to really see if I could do it better was maybe the key thing that drove you into it.
yeah.
And then you
I
got
got to
hooked,
replay
right?
my tape and really figure out what I was thinking.
Yeah.
Yeah, I mean, once what one thing I discovered was this: once you free up 8 to 5, um, I start finding a lot of people doing this stuff. Like I started talking to a lot of people, investors, maybe builders like me, or I'm not a builder, but want to be builders, and they were available. They can actually take a call, say, "Hey, Tim, what are you doing? This and that." This. I'm like, there are a whole slew of people out there doing this on their own, and I was just surprised because in my corporate life, nobody's available. You got to schedule a call like a month away just to talk to somebody that may have some information for you. But as soon as I jumped into this, like, I just freed myself up and people willing to talk to you. I can have a call with somebody from the other side of the world at 10 a.m. I'm like, how is it that you're available? Because they're also entrepreneurs. They want to discuss and talk about things. And that really was a surprise. That was the biggest. I thought I was the only one, but there are a community of builders out there that you can actually talk to and build something out of it.
Well, I know
It,
from running a recruiting firm and working with nothing but venture-backed entrepreneurs, there is no 8 to 5. It's
sure.
24/7, 365. People text you when you're at the basketball game. You have to just be available. It's a different mindset there because the clock is always running. We're always constrained. We're always theoretically behind, right? We can move quicker. I
Yep.
think it's pretty interesting. I want to get your thought on this because having spent so much time working with larger companies and getting a sense for, like you said, the silos, the lack of resources, the bureaucracy of asking permission for every little thing, which all just comes down to a lower ROI and slower time, all of that. Looking back, do you think if you were to advise a younger person, you think, hey, get a little bit of experience just to get a sense for a couple of years, but don't waste 20 because you can be effective right now with the right attitude and desire and freedom to go out unchained, even though you don't have the experience, which is different from a larger corp guy.
Yeah, so you mentioned that guest lecturer at USC. So most of my career there was to teach the entrepreneurship program at USC, specifically entrepreneurship within the Viterbi School of Engineering. So all my students are engineers, and there's some people from the MBA school, and my students can verify this. I will tell everybody at the end of the class, at the end of the semester, and say, you know what? Um, Once you graduate, please finish your school first and foremost, right? Finish your studies. Once you graduate, go find the biggest company you can get your hands on. I don't care if it's Meta or Goldman Sachs. Get yourself in, work there for 2 days. One, you're going to experience the full spectrum of humanity. People that's going to help you or destroy you. You'll get a read on everything. Two, you may find your future co-founder, right? People that has a similar or complementary skill set. And third, you may find your future investor. So I encourage all of my students, and certainly I talk to a lot of entrepreneurs, you know, if if you don't have a deep 20 years might be too much, 2+ years might be good enough to uncover the deep-seated issue with these corporations that actually have money to pay for your stuff, right? Keep that in
Yeah.
mind. You might be able to come out, build something, and speak with confidence, right? Of course, there are just giant blue sky issues that anybody with coding skills can actually solve for, but the rest of us, we have to go figure out what the pain points are, right? We can't just watch a YouTube video and talk to our cousin and say, "Oh, that was a problem," thinking that they will, if I build it, they'll pay for it. Until you work at these, you know, the dark rooms, the back rooms, the basements of these Fortune 500 companies, and say, "Wow, that's a lot of Excel tablets and and button pressing." Uh, I can automate this, or I can build something to arbitrage the situation. Until then, I'm not sure you can AI yourself out of a billion-dollar company. Maybe that's possible for other people, but for me, I felt like I had to really understand what I'm talking about. And when I go talk to, these really giant, this credit union has like 100 different branches and 1.5 million members. I can speak with confidence. I can use the same nomenclature. I can talk about the same kind of a subject that they know. They're I know that they're going through that because I've gone through it myself. So until
Yeah.
you get there, I feel like it's going to be hard to sell to to an enterprise like this. Of course, there's a lot of viral B2C products out there that I'm not smart enough to build, but at least that's my take on it. To actually work somewhere for 2 years, raise your hand, get real deep into the actual issue and build something there, and you can take it out and create something out of it.
Well, I don't disagree with you. Of course, if you've got, the classic, Bill Gates drops out of, college, right? Or Zuckerberg to start a company. I'm not going to poo poo those types of folks, but I would say overall in general, yeah, finish off your degree. Look, as a professional recruiter who's literally placed thousands of C-level leaders at startup companies and many have gone on to become unicorns, I can tell you that people look for pedigree. And even in recruiting, if you want a little bit of insurance policy, the pedigree cannot hurt you. It'll open up doors to investors when they found out you spent your early years with those big companies. Not everybody can get into Google. And you start to see these resumes in the first 5 years. There's a lot of benefit there. I feel like, though, it helps if you think of what the end game is when you go in there. So if you're thinking about, I want to be a startup guy or gal, let's say 5, 6, 7 years out, when I do go to those companies, I'm going to do things, use those resources, use that networking capability, go into that company with an intent. Like, as this is going to be my entrepreneurial training ground, what are the pieces that I need? If you're dying to just get out there and work for a startup company, I'm not going to knock that either.
Go to it.
So
Yeah.
listen, as you're talking to these young folks at USC, what is it that you're excited the most about this new up and coming generation of young entrepreneurs?
Yeah. So, I only taught at USC. I went to USC myself. And the the mixture of students that I get actually sign up for the entrepreneurship program. So it's a complete bias sample. But what I can see in them is that, like you said, they all want to make a difference. They all have a chip on their shoulder. They want to prove it. It's got some teenage angst, the college age angst.
Sure.
And they know how to leverage technology than anybody else that I know. And because they're young, hungry, and looking for um, an opportunity, they're willing to talk to anybody. They won't take a no for an answer. Um, they want to learn, absorb, right? They don't have 4 kids. They don't have insurance, but mortgage to pay for also. So it's such a breath fresh air to see them working together, um, making mistakes, learn
Yeah.
from those, right? And I'm just happy to be there to kind of give some of my personal story to say, hey, this is what I did, crash and burn, but try it, try it differently and see how that works. So it was a pleasure for me to see a front row, um, to just to be part of the action, if you will. But
Yeah.
their tenacity, their fearlessness, if you will, how they equip themselves from with technology, and all of them knows how to code to a certain level. I think
Wow.
a lot of that mixture really makes me, hopeful. And for folks like us, right, all we can do is give them some guidance and some personal stories around that. And certainly, I do have students that quit school from
Yeah.
USC, and they're watching. They know and build a really good fintech company in the Middle East. But they came back and eventually finished it. But they took the leap, and jumped in and built something and got venture funding, raised more money than I did. So just again, just happy to be part of that, and that that uh, energy, man. I don't know, okay, where it's coming from. Certainly, when I was their age, I was probably scared crapless and trying to finish my degree. But these kids, man, I mean, my God, they know they can change the world. And I was just in India a couple of weeks ago, part of the global student startup competition, where we get countries in Europe, in India, for the very first time they're participating. I was there mentoring students from IIT, University of Delhi. I mean, these students are on par, if not same, sort of a tenacity and uh, technology savvy than any of the students that I've worked with in the U.S. or Europe.
Yeah.
And one of the teams win, and they get to go on to Seoul, South Korea in May to do the global competition. And the way they carry themselves, presenting themselves, they've done it before. And I was really
Yeah.
surprised, happy that this is going to be the next generation of leaders, right? So when I retire, these folks are going to build the next sets of infrastructure technology that I get to enjoy, hopefully. So
I think there's a mindset in the younger people that has been opened up by access through technology. So they get things done very fast because there's so many tools available to us. And the idea of starting a company today, you have access to capital, you have access to unlimited tools. You can build a company from your computer, right? And in the future, you won't even need to know coding, right? You're going to have
yeah,
agents and
yeah,
they're going to vibe and all that we're moving to today. So, you know, back when I started out early on, even back in the old software days, you needed massive amounts of money. You had to physically distribute the software across the country and across the world. The scale was so monumental. It's always like, I'm just going to work for a big company and we'll see what happens. But today, I mean, I think the mindset is I don't have to do that anymore. I can connect with people all over the world and I can do it from my PC. And so I just think there's a different shift that I'm seeing. And I even see it in some of my children, that are on the younger end as well. And like you said, that energy is so exciting. And if we can, let's shift a little bit to one of your lifelong passions, which is fintech. It's one of my passions too. I do not find anything about fintech boring. As a matter of fact, when you think about it, I'm on fintech apps the entire day. And, when I'm done this podcast, my son who's off for the lunar holiday, growing up in San Francisco, we're talking about, he wants some help installing Zelle and Venmo. He's about 13. And the idea of not going to a bank branch and, taking a snapshot of a check and having that auto deposit is really exciting. But this idea of using tokens to transact in the future,
mhm.
having that lineage and history through chain, and then what agentic agents are going to be doing. What is it as a lifelong fintech guy that runs a really exciting high growth fintech company right now? What do you find most exciting about the industry and where it's going?
Yeah, it is lowering the cost of everything. That's what's exciting to me. You had mentioned that, numbers of years ago, for you to do a startup, you got to rent a rack for everybody else. It's like, uh,
Yeah,
don't look at get a physical server, install the product to distribute, or actually go onto customer sites and actually do these installations on expensive servers and pipes and all that stuff. Today, you're absolutely right. You don't need to raise millions of dollars to start your company. There's lots of
right,
software out, open source software. You can piece something together, and only if you want to scale this to, billing customers or something like that, then you may need some venture money to kind of get it to scale. But to start a company, you don't need anything. Actually, to start LendAPI, we didn't raise any money. We just kind of bootstrapped this until we found a place where that inflection point to grow this company. Then we felt like we needed to raise the money to get this in front of people's eyes. But what's really exciting about fintech today is, again, lowering the cost of everything from building a product, launch a new product, getting financing in the hands of retailers and things like that as a bank, running transactions, running payments. The total cost of ownership, the total cost of operation is going to go down to probably zero. 10, 15 year. You mentioned crypto, you mentioned blockchain. And the most exciting stuff is, um, uh, USDC, USDT, right? These essentially the image or NFT of a real US dollar, if you will, right? So a lot of people
yeah,
in Brazil or Argentina, some of these other countries, if you go to the bank and say, I want US dollars, because that's just, a reserve currency, they'll laugh you out of the bank. They'll call the
right,
police probably. So how does one in Brazil move money or own USD, the actual greenback, is through
stable coins.
stable coins. You're
Yeah,
absolutely right. Thank you. Stable
sure,
coins, right? So you can actually own an image of that dollar that's parked somewhere in Delaware, some kind of a warehouse or whatever it might be. So they can transact using the image or using the serial number on the image, it's NFT on a USD, if you will. So
right,
if you look at how to transact these tokens or images of a real dollar, there's so many different networks. Solana is one network that's built for this kind of high speed, low cost transaction. You can pass money from Brazil to US maybe down to 1 penny,
yeah,
versus $35 wire fee, some percentage of Visa, Master swipe fee for international transactions. So if that goes down to zero, you know, you're going to unlock so many commerce, so many opportunities for people in Brazil, Argentina, for some of these places, and cross-border transactions for people to move money from Hong Kong to US, US to Brazil. It just lowered that cost of transactions to essentially zero. And
yeah,
when a bank wants to launch a embedded finance product to finance consumer goods, luxury items, right, it would have taken, and we actually, in fact, talked to a bank recently. Oh, we budgeted $3 million 3 years to build this, and we did it for a fraction of the cost in 4 months. Right. So if you look at this, if you look at how technology is evolving, people can go to market, get to market so much faster with almost zero cost, and they can immediately see an ROI on the product that they build, or any kind of a transaction financing opportunity. So the cost is going down, launching products, moving money back and forth, using some of these newer rails, if you will.
mhm,
It's unlocking so many different things. So all the venture money is going into stable coins and maybe some AI agentic stuff to further alleviate people from touching that transaction. Every time you
yeah,
touch it, it's going to be an hour delay, a day delay, right? So if you can use some of this, some of these systems to really make a decision on behalf of a person, one is consistent; it's always going to make that same decision over and over again. Two is quick. So pairing that and the lower cost of transaction, you can unlock. We're going to unlock so many different things, and that is the barrier of entry for a lot of financial services companies, or even mom and pop shops that wants to do international business.
yeah. Well, let's talk about your company because I think it is super cool because there are so many retailers out there and companies, whether it's an auto dealership or a furniture store, or whatever, that's selling a product in which the consumer would like to have options to finance it beyond sticking it on their credit card at, a 20 to 30% payment fee if you don't pay it off. And what I love about you're doing is you're providing an ease for these people to access credit markets. Let's say you have a furniture company and they want to sell a $5,000 table and they'd like to finance it, and they don't have a credit department already pre set up with. There's all the regulatory issues. There's the risk assessment. You really have to know what you're doing, or you can get burned, right? Um, but being able to provide that access to alternative payment structures could be the difference between whether you actually sell it at place A versus place B. And your platform allows people to get on very, very quickly and either connect their lending source with their company, or I believe you even have a network of capital providers that people can access if they didn't have those existing relationships.
Yeah, that's our vision to launch any financial product instantly. We use even, um, should I say, a sexier example. We've been working with this company called Luxottica Adera, which is an Italian company. They own Sunglasses Hut,
Okay, sure.
lens crafters, and all of the Target optical stores. If you walk into Target, there's Starbucks, there's Target Optical. They came to us and say, you know what, we want to do our own in-store financing. They are working with some of these pure play lenders like Affirm, Sezzle, all these companies, right? But it's a different experience. It's kind of awkward. Sunglasses Hut wants to have their own brand. They actually call it Sunglasses Hut Plus. It's like Disney Plus or something like that, where they want to curate an experience to give their shoppers more money, more capacity to purchase additional pairs of glasses and things like that. So it would have been a 3 5 year kind of experience. Actually, I don't think they think it's possible to do this themselves because they're in the glasses business, right? They're not in finance, they're certainly not in technology. So we presented all this stuff and we launched them in 3 to 6 months. We just launched all their stores in Miami a couple of months ago, 40, 50 stores, and we just launched all of their stores in DFW, the Dallas Fort Worth area. That's another 40 stores. So now we're in like 80, 90 stores. You go in, it's an iPad experience. In a couple of pages, you get the shopper qualified. It's a high approval rate because they want to have that experience. We generate a QR code or SMS. They scan it and bring that experience on their personal phone, give consent, sign a promissory note, take a picture of their first payment method. Could be a debit card, credit card.
Wow.
We process that first payment and off they go. They can buy two, three, four, five, six pairs of glasses. And the most popular item is actually Meta Reband right now because this company also owns Reband, the brand. So yeah, all these Gen Zs and probably some Gen Alphas are um, using this left and right. You're absolutely right. That 20% interest on a credit card is a compounding interest. You will never pay
Right.
off.
Right.
And a lot of people just don't want to use a credit card because of that. And a lot of people don't want to use their cash either, right? They want to preserve as much cash flow as possible. So chopping up a Meta Reband, which is an 800, 900, $1,200 item
Hmm.
into 24 payments, it's easier on the wallet, 0% interest, right? Sunglasses Hut just want to push more products. Just makes everybody happier. So you're absolutely right. A retail outfit like Sunglasses Hut or Luxottica, they're not technology experts, nor should they be, right? I ask my clients, close your eyes and do you want to be a bank or do you want to be a software engineering company? And you open your eyes and made that decision, then we can continue
Yeah.
the conversation. So we bring the lending solution. We have lending partners with the technology. We send people to the stores for store openings. That product opening. We take care of all of that for them. And I don't think they believed that it was possible. Now we finance over 1,000
Wow.
last time I checked, it's only been a couple of months. It's over $1 million worth of product that they financed.
Yeah.
So yeah, it's a great thing. And all of these retail outfits that are a higher margin, like Sephora, for example, the makeup place, right? My daughter will go in there. You can't walk out of that place without spending $250, right? If they come up with a subscription solution or payment plan, I think it's going to
Yeah.
bring a lot of revenue to them. And these are high margin businesses, right? The first couple of payments probably covers the hard cost
Right.
for the product and service trying to deliver.
No,
So
I love that idea because I don't love credit cards because people fall behind, as you said. 20 to 30%, that debt is doubling basically every 2 to 3 years, and you run into this issue. But if you bought something that was $1,000 or $2,000, I'm just going to pay a little bit off every month for 12 months, the way you would negotiating a medical bill with a hospital or something, same type of thing. It makes it very palatable and easy. So I love that idea. I also see that where if you had a huge expensive item, 50,000, something like that, it's one thing to finance it. But a retail store that's selling a lot of items that are under $1,000, they're not going to like set up this whole thing to become a lender for that. But with this platform now, you open up this whole new, I guess, incremental revenue stream because you're making it really easy for people to not only buy what they wanted, but to think about, hey, I can get a couple extra things here, and it only ends up becoming another whatever, $20 a month, and I budget that over a year and I'm done. So pretty amazing.
Yes. The retailer's pain point is always maximizing, of course, they're just trying to maximize their inventory throughput. But for some of the service oriented retailers, for example, dentistry, right?
Yeah.
Although they
Mm,
sell a lot of products, but it's really get me a patient that's qualified to sit in that chair so I can fill that spot for an hour. It's almost like the hotel business. So if they go through these pure play financing companies, right? Their agenda is to control risk, and they don't want to work with these dentists to come up with a plan to maximize the perishable chair time, if you will. So when they hand over a tablet to one of their patients, most likely they got declined,
yeah.
and the guy is showing up during the lunch hour trying to get something fixed up, and all he's doing is filling out credit applications, getting declined left and right. And some of these dentistry places are actually owned by private equities. They own like 30, 40, 100 of these locations. So they said, well, we just need to do this ourselves, right? To get people sit in the chair, even if we take a hit on the MSRP, even if we ask a slightly higher down payment, let that person sit there because I've been treating him and his family for past 10 years. He's going to be good for it.
Yeah.
So
Yeah.
until you bring this private experience with this type of technology to really work with retailers to tailor that experience to what they need, all you're doing is one click checkout,
Yeah. Yeah.
that
Right.
doesn't align with these retailers' agenda.
Yeah, I mean, the focus should always be on lifetime value, you know, and that would
Yeah.
drive that consistency. Not having that option makes you go somewhere else where you can get a finance. And I learned this very close to home with I have 4 children, as well. When they have
Okay.
to have braces, for example, right? That has to be financed for most people. They're just not writing a casual check. If you have enough kids, it adds up. If I owned a company, I don't want my client to ever go anywhere else because maybe they'll like it. First, it's the kid with
That's right.
braces, then it's the second kid with braces. Then I'm like, whoa, well, maybe I'll give it a shot. Next time, you just lost a family of five that you would have had for 20 years, and now they're
That's right.
gone. So
That's right.
I love all these cool kind of things that we're doing. I mean, we live in a credit driven world. That is the reality of it. I mean, everything about our banking system is credit driven. The Federal Reserve, everything, the way we print money. So whether we like it or not, for good or bad, this is where we're at, and trying to provide an easier access for people to be able to manage that and manage that cash flow. I think overall is a good thing. So kudos to everything you're doing. What are you most excited for with Lend API in 2026? What's the big goal you guys are trying to hit?
Our product is built. We have a lot of clients on our platform. I talk to Sam all the time about this. This is our year 3. I feel like it's our breakout year. The Sunglasses Hut's, the Universal Dentals, the Boats.coms, all these large retailers are waking up in the morning and saying, you know what, we can actually do this ourselves with technology and these framework. I think there's going to be another 7 years of uh, maybe I can use this with decentralized kind of a thing where, the 7 years ago it was PayPal, Affirm, Sezzle, all this stuff, right? So now it's going to be a lot of these privatization of these platforms where the Sunglasses Hut, the Sephora, these brands, these big retail brands can actually do it themselves.
Yeah.
And we have sort of commoditized this technology to kind of push it down this way. Add to what I was really excited about earlier, which is lower the cost of everything.
Yeah.
right? If you lower the cost of setting up this product for your dentist, and if we move the transaction, move money would not, 5% paying to MasterCard, Visa, you can make it into like nothing. It just helps people, fundamentally, to not have to worry about, oh my God, I took out this loan. Is somebody else going to ask me for 5%, 20% interest rate on the back end?
Right.
So what I'm excited about is desystematizing this technology and actually have, credit unions is a great example because their whole thing is about not making profit and, not for profit, if you will, pushing all that profit back to their members, which is the owners of the bank of these credit unions. Works great because if we bring technology that's 1/100th of the cost, they've either built them themselves or some old guards of the world. It just passes all that cost or all that
Yeah.
overhead, right back to their member, make it a little bit easier on everybody's wallet. That's what I'm most excited about.
Credit unions are very cool. I know with banks, their primary objective in the world is not to reduce costs for their clients. Yet credit unions, they like you said, they view people as their members, and their goal is to serve their members. And certainly lowering cost and making their lives easier is a big thing. As we wrap this up, one quick last question because we started with talking about entrepreneurship for any young folks that are out there, whether in the ESC program where you're lecturing or whether they're just starting out on their own or they're thinking about leaving their
Mm.
company after a couple of years. If you were to do it differently today than you did, starting over again, how would you do things differently?
And again, this is the second thing I tell all of my students, which I wish I had the opportunity to practice more, is that just raise your hands. There's lots of opportunities within these big companies. They'll say, "Hey, is anybody available to work on this project?" A lot of people shy away from that because they have their responsibility 8 to 5. They got to go home. My pitch to myself, um, you know, 10, 20 years ago would be, you know what? I'm just going to raise my hand because I want to learn because you never know what that leads into. And
Yeah,
I've done a couple of times. I should have done more. When you show up in a room with 17 other people that also raise their hands, they're all curious. They're all sort of of a similar cut. And even if you don't know what you're going to be doing or you don't really understand technology, when you show up, nobody does, but they're there to
right.
figure it out. So you they're to learn, right? So man, I hope I would have done more, and I wish I would have done more. But my recommendation to everybody else is that if you find yourself in these Fortune 500 companies, whether it's Apple, Meta, or Goldman Sachs, if somebody asks, "Hey, anybody want to work on this stuff?" Raise your hand. You'll never go wrong.
Yeah. Plus, you get a chance to work with other human beings and those relationships. Like you said, how many times in your career had you met somebody and then your paths crossed in some type of business productive way, like 7, 8 years later down the road? You're
Yes.
every time you raise your hand, you're planting a seed. And you don't know which is going
Yes.
to become the beautiful tree one day. I know if you don't plant many seeds, then your options are going to be limited. So it's kind of like the game of
Well said.
Monopoly. Try to purchase everything.
Exactly. Well said. Get
Well,
yourself
Tim,
out there.
Tim, thanks. It's been so fun. I really appreciate you joining and sharing these decades of wisdom that you've learned, the scars on your back, and really bringing a great perspective to anyone who's thinking about taking that plunge into the entrepreneurial world. I appreciate you. Thank you for being here.
Happy to help. Thank you.
Thanks, Tim. Cheers. The Startup Innovators podcast is provided by MatchStar Venture Search. If you're interested in any of our executive roles or need help sourcing world-class talent for your company, check out our website at matchstar.com.